We're talking Bitcoin price today on Bitcoin Season 2. Yes, there's a bunch of price models out there. Power law, stock to flow, Metcalfe's law. Colin and I are going to break all of them down because guess what? All of your models are wrong. Every single one of these is going to break someday, and we're going to tell you why. That's your teaser. Welcome to Bitcoin Season 2. Bitcoin Season 2 is sponsored by Arch.network, the platform building bridgeless apps on Bitcoin. More on Arch later on the show. Let's kick it off. All right, Colin, $110,000 Bitcoin today, but where's it going next? That's the question.
I don't know, Charlie. Who can you trust? Do you trust the Twitter anon with 1 million followers who is hucking a rainbow chart? Or do you trust the Wall Street analysts and the bankers who are setting price targets based on maybe conservative, estimates and also, deep quantitative modeling? Or do you just put a bunch of price targets on a dartboard, put a blindfold on and throw it at the dartboard? You're probably better off just doing that, or like giving a monkey a pencil and like having it write down what it thinks the Bitcoin price will be.
Yeah, basically we're, you know how you can like put 1,000 monkeys and on typewriters and they'll eventually put out Shakespeare. That's kind of what's going on with Bitcoin price modeling right now. And, to be frank, I have a buddy on Facebook who keeps posting that he's been right about the price of Bitcoin for years now. So shout out that guy. I think everybody has one of those friends who they kind of lost touch with in high school. And now they're
I'm only listening to that guy if he's like posting from a yacht that's bigger than Bezos's yacht, and he has like 5 houses all around the world. Because if you really truly can divine the price of Bitcoin, you should be very, very wealthy at this point.
Yeah. Here's the price of Bitcoin sent from my iPhone 5.
So price modeling for Bitcoin, really, this is probably not fair, but for the sake of it kind of entering the Overton window of most Bitcoiners' consciences, I think that the kind of the genesis of all of these really comes in 2019.
Yeah, this is the big one.
$1 trillion USD's stock to flow model.
Otherwise known as Plan B. This guy became the Bitcoin price model influencer, and a lot of the Bitcoin podcasters of the day tied themselves to the mast of this price model.
It is really hard to overstate how nutty and like kind of cult-like people got for this model. And like to back up, this was 2019, a year when Bitcoin, I think in the summer, like surged to like 11K or something around that. For like it peaked above 10K for a little bit in the summer. It was during the Bitcoin conference in San Francisco, and people were heralding the next bull run. But for most of the year, Bitcoin was chopping between like 5K, 4 and 5K and 10K. And it was trading in this range. He came out with this model. 2020 comes around. There was this really funny moment where the model breaks down because of the COVID crash, and Bitcoin gets cut in half from 10K to like 4 or 5K. And then it slowly starts climbing back up. But it gets to the point where actually the model was tracking quite well. And, a lot of people were kind of hanging their hat on this and saying like, this is the thing that will really actually predict Bitcoin's price. You had a lot of pushback. I think some people might remember Nick Carter at the time wrote like almost like a novella length essay on the efficient market hypothesis as applied to Bitcoin, basically saying if there are known events within an economic system, those things are priced in well beforehand. And maybe that's a good place to back up with regards to the stock to flow model.
Maybe we should explain what it is, because I feel like we've almost forgotten what it is. I'll take a stab at it. You can probably elaborate. So the idea is we borrow from like commodity pricing views that similar to gold has certain creation rates. We can then say gold is scarce, demand is infinite, gold has a certain rate of production, and so we can derive a flow of new gold assets into the market and compare that against, I believe, the existing stock of it. Is that where stock to flow? So it was a ratio of these two metrics, and then you can identify that during halving events, when you have less flow into the system, the Bitcoin price should go up. So it's hardly discernible from like a cyclical view of Bitcoin, but it's one with numbers you can derive out of it.
Yeah, and to build on that, taking from this chart at BitBo, and this was pulled from Plan B's Medium article modeling Bitcoin's value with scarcity. The stock to flow is a number that shows how many years at the current production rate are required to achieve the current stock. So the stock is the outstanding supply of a commodity, and the flow is that production rate. And the higher the number, the higher the expected price. So basically what this model does, and the reason why Nick Carter published that article about the efficient market hypothesis, it wholly rests on the halving as kind of the fulcrum of the model itself, because the halving reduces Bitcoin's flow. And so it stands to reason, this is a pretty rudimentary argument, that, the flow, it's decreased every 4 years. If demand is kept at the same rate or increases, then we should expect the price of Bitcoin to appreciate, right? Now, Nick Carter's argument was investors know about the halving. It is a known event. You can literally calculate it within a relative degree of certainty based on where block times are, when it will be. So that should not necessarily impact price if people already know about it. There's also the really good counterpoint. It's like, it doesn't matter what the flow is. If there are sellers on the market, then that you're not going to get at a higher price. But the one thing I wanted to point out, if you look at this stock to flow, this is the updated stock to flow. Right now, we're under the band of where we would expect to be. So we have some catching up to do. If I'm reading this right, we should be in the ballpark, according to the model, of about 295, 300,000. It's an approximation. I understand that, but we're still tracking below the line according to the model. But, at the end of 2025, the stock to flow model would put us at $367,000. So you heard it here first, folks. That is the price target. That's when you should sell. No, but in all seriousness, the reason why I'm showing this is because the first stock to flow model had to be revised downward.
Yes.
There was a revision.
This was my favorite little event of the stock to flow, which is when the progenitor of it, Plan B, was like, okay, we got to revise it and we got to rename it too.
100%. So this is the original stock to flow model. And if you can see, if you're on video right now, according to this model, we're already almost, we're almost halfway through 2025. We should already be at around $1 million. This is coming from a Forbes article from back in the day, 2021, written by Stephen Ulrich, one of the he works at Unchained now, but he was a former head of their digital asset research. But according to this older model, we should already be at $1 million. Now that would be really awesome, but if you traded based on this, you would be sorely disappointed, because obviously we are not at that point. So I think, needless to say, the stock to flow is useful in as much as it does kind of point to one of the underlying bull cases for Bitcoin, that scarcity is programmed into the money. But it does not account for the fact that once there's already stock out there, it's assuming almost that all the people who hold it will never sell. And that's just obviously isn't the case. It's really, I think, the first big price model that has been thoroughly broken. And I mean, I think it's safe to say, you really should not be looking at this and using it as expectations for Bitcoin's price.
But it's really hard to overstate how stock to flow mania took over. You had the confluence of a bunch of things, an enigmatic, anonymous guy who sounded really smart and European, talking about this. He had a new paper on it, which could be understood by I would say mid-curvers, who had never really looked at price models before. And then it kind of caught on with a few of, I would say, the new rising macro stars. And this was the model. People just said, this is how it is. You can't argue with it. Now we have the luxury of retrospection. Right. We can look at this and say, here's how it always went wrong. But at the time, it was really really discern. So,
and to his credit, on his Twitter, his bio says all models are wrong, but some are useful.
Yeah,
and
I
not
like
to
that.
like blast Plan B. He came up with the model. It is an interesting lens through which to look at the price of a commodity like this. He makes analog references to gold and silver. Dude has like 2.1 million followers on Twitter, which is wild. But it just goes to show you that price sells, right? I mean, you can go look at Forbes contributor page, and like the number one articles are always ones that have some sort of like shocking price prediction or something like that.
No, there's very few models which are popular which say Bitcoin's going down. Maybe, there's only
maybe people who hate it. Maybe for like the Amy Casters and David Gerards of the world. Those are. If any of our listeners know who I'm talking about, you get a gold star because that's like some ancient Bitcoin history at this point.
Okay, so which one do we want to go to next?
I think we have to do the rainbow chart because it is well, number one, we're celebrating Pride Month with the rainbow chart.
Exactly.
But number two, it was a response to stock to flow, directly mocking it. And am I right? Am I wrong about that?
You are not. Well, the rainbow chart I think is the oldest Bitcoin price prediction chart known. It actually was originally circulated on r/Bitcoin markets back in 2013 and 2014. There was some random dude who just kind of painted a rainbow on a chart and just kind of eyeballed it, squinting and kind of eyeballed it and drew it. And because it's got such a massively wide range, it looks small here on my screen if you're watching, but because of that, Bitcoin's kind of always within the range of the rainbow chart. But then in response to stock to flow, Eric Wall, now of the Taproot Wizards, I kind of resurrected it and started memeing it. So it was like an old kind of goofy thing that this one dude would post online over a decade ago, and then it was resurrected, and Eric Wall now carries the rainbow banner. And the rainbow price chart is really simple. It's just a rainbow, Roy G. Biv colors on a which kind of looks a little bit like a logarithmic function on a chart. And the idea is whenever the Bitcoin price is in indigo or purple at the bottom, you buy. And whenever it's in orange or red at the top, you sell. And you know what, Colin?
It's kind of undefeated.
It's undefeated. There was a brief aberration in whenever Bitcoin crashed after FTX, but it only lasted a few months, and we're back in the blue, which is buy. So
which is pretty incredible if you really think about it. It's actually, like, funnily enough, it's more reliable than stock to flow in a way. Although it's, in a way, stock to flow is similar, though. If you look at, he has the days until next halving color coding for it.
Yeah.
Right. And it seems like for, a lot of it, if you're buying in that blue range, you're probably doing all right before a run up. But the blue is directly after a halving event. And
shout out Bitbo, who actually puts the rainbow chart on a chart, so you can look and see what year it would technically break. So like if we're going to look at see what year is the absolute lowest part of the rainbow chart at $1 million, that would be roughly 2034. So if Bitcoin's under $1 million in 2034, the rainbow chart will be technically invalidated. Although it technically has been invalidated in the past.
It's never like quite, it's always just kind of reaching the upper bound.
Yeah.
But I think this is what's funny about the rainbow chart is it's kind of a foil to itself, because on the one hand, it's somewhat useful, but on the other hand, it's a total joke and you shouldn't take it seriously, So I feel like it's kind of the perfect encapsulation of the fact that, yes, like Plan B says, all models are wrong, but some are useful. It's a good reminder that there are things about this that might be helpful, but you really should not take them too seriously. Because at the end of the day, like a rainbow, you can't, as Eric Wall, I think, has tweeted before, you can't predict the price of Bitcoin based on a fucking rainbow.
Yes, you can, Colin. Let me tell you about one of the most slept on opportunities in crypto. Arch is building fast, composable DeFi apps on Bitcoin. Arch apps tap into the OG blockchain with by far the most liquidity and best brand in crypto. I've known the team for over a year. The tech they're building is solid and they are racing towards mainnet. There's dexes like Saturn, meme coins on funkybit.fun, instant loans on Cha-Ching, and so much more. Plus, they're rewarding testnet users. So join me in trying out Arch while it's still early. Well, enough with the squinting, finger in the wind charts. Let's go to one which relies on math and hard science, which is the popular one of the day. Thanks to
this cycle's stock to flow.
This cycle's stock to flow. You gotta love it. So this model comes from a charismatic Italian man named Giovanni Santostagi, and and it basically says, again, like, I have not paid close attention to this, but I can like TLDR it. So basically, it suggests that Bitcoin's price grows in a non-linear but predictable pattern. It has an equation and assumes diminishing returns over time, but it's still like massive upside. It fits better on like a log chart than other like exponential growth models. And it comes from another like field of study of just like the power law, which you see a lot of things in like physics or like feedback loops like grow from according to a power law projection. It's very interesting. The power law, as I show here on BitBo, again, BitBo is kind of the source for all your meme charts. Bitcoin's price fits perfectly within power law. Now, I don't know if like Giovanni has like overfit this for Bitcoin's price or not. It's also like, the funny thing is, if you were to stack all these charts up next to each other, they would all kind of look the same.
Yeah. I mean, they all include some upper band that, the price will touch, and that's when you sell. And then there's some lower band when it bottoms out, and that's when you buy. So a few things from the BitBo chart, just to explain it further. This is quoting from the chart site. This chart is derived by taking two bands of Bitcoin prices, a resistance price above the current price, a support price below the current price. These resistance and support bands were derived by taking a linear regression of the historical price, Bitcoin price, to derive a, quote, power law, end quote. This power law is just a straight line to represent the correlation between Bitcoin's price and time. The line is then perfectly copied, including its slope twice, with these two new lines. One is lowered such that the historical Bitcoin price is always equal to or greater than the prices hitting that line, the support line. One is raised such that the historical price of Bitcoin is always equal to or less than the price hitting that line, the resistance line. So, I don't know.
I mean, you have these support and resistance lines today at 41,000 and 420,000. Now that's a pretty big range. Like, I feel like if that's such a wide range that it's like really difficult for this to be invalidated anytime soon.
I think that the ways to test it, honestly, like as to whether or not you can completely invalidate it, he kind of gives us that ammo. And it says how to interpret the Bitcoin long-term power law chart. Using this chart, two conclusions or perhaps assumptions are made. The price will reach 100,000 per Bitcoin no earlier than 2021 and no later than 2028. Already cleared that hurdle. After 2028, the price will never drop below 100,000 TBD. The price will reach 1 million per Bitcoin no earlier than 2028 and no later than 2037. After 2037, the price will never drop below 1 million. So guess we're going to have to wait until 2028 and then 2020 and 2037 before we can really understand the power of the power law. One thing I want to point out, Charlie, before you have any last minute comments, that I just think is really funny. And I don't know, at first I actually thought that this was him joking around. But if you look at Giovanni's profile picture on Twitter, he kind of looks like Paul Krugman.
Yeah. Yeah, he is. Okay. I mean, like, Giovanni,
noted economist a noted economist who hates Bitcoin, but he like low-key looks like Paul Krugman. And I don't know if this is the universe winking at us, but I legitimately thought that this was just him joking around. Like, and he was like using Paul Krugman as his profile picture, as, you know, like people like Darth Powell, right? Will use Jerome Powell.
No, Colin. So this, I mean, I shout out Giovanni. Giovanni, if you want to come on the pod and talk about it, please do. But like, Giovanni is, he's a very kind of comedic Italian figure, if I could be so blunt. I don't know if he intends to be comedic, but like he'll go on spaces and he'll rant and he'll like talk about, you know, all the math behind it. And I'm like, bro, like you have a hilarious way of explaining things and I can barely understand because like he's got a really shitty microphone on these Twitter spaces. And so like you get like in and out of like what sounds like, you know, garbled Italian English. And he's like, you know, getting very heated about the power line. You love to see it. It's amazing. It's, I think that's part of the allure of it because like the more you have to work as a listener to understand what he's talking about, the more primed you are to already kind of like agree with him and think that, he's totally right about this. I've discovered this crazy Italian guy who's got this crazy new like formula for the price of Bitcoin. So like people love that stuff.
Right. I mean, everyone loves an animated Italian man. You know,
I'm rewatching The Sopranos right now. I'm trying not to make a Sopranos joke. It's okay. Okay. So then we got this is actually one of my favorite. This is one of my favorite charts, and this is one of my favorite methodologies for trying to determine the price of Bitcoin, and it's Metcalfe's law. Now this is broken today, I believe, but I haven't seen an updated chart. So Metcalfe's law is a way for measuring the like value or growth of a social network.
It's like the value of a social network is like the square of its active user base, basically.
Exactly.
Or square of the root of its active user base, something like that.
Proportional to the square of the number of its users. So with Bitcoin, because it's transparent, we can see which addresses are in use and we can get a rough estimate of like how many users are on chain. And so from that, using Metcalfe's law, you can project or roughly estimate, like draw a line or projection for Bitcoin's price. So there was this guy, Timothy Peterson, who was kind of the guy pushing this model. And I like a really good heuristic. And this is a very strong heuristic because it makes sense. It's got historical precedent. And I like things which use like on-chain metrics. I'm kind of biased towards like this is like the peak of on-chain metric season in Bitcoin. And so Timothy drew a Metcalfe's law projection based upon the number of users. However, we've seen this break since then.
And break to the upside too, which is what's interesting. Because like if we look at this, I mean, if you look at it, it kind of looks like, well, actually, no, we're tracking pretty well with it. I was going to say it looks like that the Metcalfe's law doesn't anticipate like 100K until around July 2026. So we're kind of outpacing it a little bit. I agree with you, Charlie, that at least like the nice thing about this is it's rooted in a kind of principle of just the underlying value of a network based on its users. So like there's something anchoring it to actual use. And he tracks that use based on, I assume, active addresses on the network. Where it falls short and why you've seen a decoupling, right, of like Bitcoin looking overvalued compared to the Metcalfe's law is as Bitcoin has become increasingly institutionalized, the number of trading going on off chain and on paper, you know, with these ETFs and other custodians has only risen, right? So I think that's why this will not be, it will be useful to a point. And there's almost an existential argument to it too, in the sense of like, if there isn't that much on-chain activity going on, could you actually make an argument that it's overvalued from a technical standpoint? I don't think that really holds water because Bitcoin's not just a technical phenomenon; it's a monetary phenomenon, you know. But this model does just, I think, generally break down the more Bitcoin becomes kind of a standard investment, right? And the ETFs kind of blew this out of the water, I think, because the other thing I wanted to point out, and I'm going to pull up some reporting from Blockspace that we published today, a guest post from Matt Kimmel. Mining Pod listeners will know Matt as one of the trio for the news roundups on the Mining Pod, but he's also an analyst and research analyst at CoinShares. And he pointed out that the change in institutional holdings for ETFs fell in Q1, but a lot of that was on a dollar denominated basis, was not just because Bitcoin fell over the quarter. It's also because hedge funds were trimming their position, but advisors added to their positions. And so I think one of the things this year, people have been saying retail's not even here yet. They're here. They're just here in a different way. They're not buying through the traditional means. They're going through the ETF. They're rolling in their 401ks or their IRAs into an ETF, or they're buying directly through BlackRock, Fidelity, etc. So I think just to kind of cap that off, when we see these kind of buying patterns, something like Metcalfe's law can't really necessarily explain the value of the network, because there's not a good way of measuring users unless there's some way for him to get that data and incorporate it into the model. But that's much more labor intensive, right? Like you would have to manually input it.
If you expanded Metcalfe's law to like, and you expanded like pure, almost like, I want to call MicroStrategy or Naka, like a pure play Bitcoin play. If you expanded it to like number of shareholders for those, you might be able to like have a revised Metcalfe's law, which could, demonstrate like a more useful projection. But again, not in the business of trying to figure out what that looks like. I'll also make a comment that that Timothy Peterson coupled this with a very long research report in 2018, 10 pages, dense numbers, all this stuff, great methodology, projections. So, basically, in my opinion, the longer the paper, the more I tend to trust the actual model, because it usually, I don't know, whatever. I'll also say that Bitcoin is not a social network, so it's not exclusively a social network, so it can't be modeled one to one as such. But
right.
This is another model which is useful, but also
useless.
Useless.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
Okay, let's look at I think the most useless chart of all time.
The most useless or the least useless?
I'm pulling up the Hyper-bitcoinization chart.
Oh, yeah, no, absolute clown town.
This is absolute clown town. It's the most bull-tard chart you can imagine ever. And for the listener who's not watching, have you ever seen one of those like logarithmic curves on Bitcoin? Well, imagine the logarithmic curve continues, but instead it starts curving up. So such that by 2030, Bitcoin has a total market cap of 100. It doesn't even, I don't know how the market cap is, but basically,
no, but the
by 2030,
one Bitcoin would be
one Bitcoin is $100 billion.
I mean, the way I read this is like in this scenario, it's actually, you're cheering because Bitcoin's $100 billion, but actually everything is crumbling around you. There are cannibals roaming the streets. The world is going through an apocalyptic death spiral. And it's like Zimbabwe level inflation where, you have the like $1 trillion bill, but that's happening everywhere. So actually you can't spend your Bitcoin on anything because all of the stores have been looted and burned down. And the only currency that matters are bullets, booze, and cigarettes.
Yeah.
So, I actually think this is a tangent, but when Bitcoiners talk about hyper-bitcoinization, I don't think they realize how scary that is on a fundamental level for not even for the rest of society, but for them too, because that implies if it's not a gradual process, if it's a kind of like Weimar inflation or Zimbabwe inflation, sudden shift to Bitcoin, you suddenly have millions, if not billions of people. We'll just focus on the US context. You have tens of millions to hundreds of millions of Americans who are completely immiserated and have no recourse because the value of their life savings is destroyed. And we kind of descend into the worst kind of, BioShock, Rapture-esque, all the haves and the have-nots. I mean, that's a complete collapse of society.
Yeah.
And you may be happy in your citadel, but like everyone around you will be suffering.
Yeah, this is where it's Mad Max, where you are the Baron who owns all the water and the gas, and you deign to allow your subservience below you to have a half glass of water every day because you have all the Bitcoin. This is, it's a Bitcoiner fantasy.
Maybe we are a death cult. Anyway,
okay. So the last one, we'll kind of wrap up with this. Is I'm like Babe Ruth calling a shot here. Is I have discovered what appears to be a new type of price model, and it's a little bit vibes based, but it's a kind of thesis based. And I anticipate this being like I anticipate this being kind of like one of the things which people like refer to going forwards this cycle. And it too will be wrong eventually. But I'm colloquially calling this the institutional structured bid corridor. And if you're listening, you may recognize like the parabolic advance kind of curve for each Bitcoin cycle. If you zoom really far out, often people will draw a parabola that Bitcoin seems to follow and then reaches a mania, and then it breaks that parabola and enters a bear market. We've done that a few times, 3 times according to this chart. But now Bitcoin's price is not really following a parabola. It is following, it seems to be in some kind of channel, which is interesting because it's a little more muted than it has been. And we also don't see that many signs of mania. I would say, having been here before a few cycles, like, doesn't feel like mania. And Bitcoin seems relatively tame and calm. And it's in this channel. And the idea is, because you have institutions who are slower money, as Matt Kimmel wrote in our newsletter this morning, slower money, you have more of a structured bid where it's not as reflexive or reactive of like a retail piling in and being this crazy marginal buyer of the next higher Bitcoin, but rather you got the more slow and steady people coming in. And that means that Bitcoin will just kind of continue to advance indefinitely through, say, what looks like a price channel. And I will say, just gut check, this feels like the model to be looking at this cycle. To me, I've voiced this privately to friends, and like, it feels like, yes, this time is different. And I don't really anticipate the same kind of delusional hypomania. So like this, passes kind of my own personal mental model smell check. However, this too will be destroyed someday. I don't know how.
I think that if you just think about it qualitatively, and I guess quantitatively, because we can actually see how much of the ETF is being traded and things like that, this would make sense to me in the sense that we might be entering a new paradigm where you don't have the same severe drawdowns that we've had in the past, which I think would be very healthy for Bitcoin. Those drawdowns have harmed investor perception of it for years. And so you might not have the same like juicy low buying opportunities, but you're also not going to have maybe these huge blow off tops that we've been seeing. And as that the guy who devised the model kind of points out in his tweet, what you'll probably end up seeing are, these kind of chop solidation periods where there's a long, like the periods of suppressed price are much longer, but they're not as deep. So it's a matter of, breadth rather than depth with this. And to me, it makes total sense. And I think on a long enough time frame, Bitcoin's going to eventually achieve this. It seems like the cycle might be the one where we do get that, but at the very least, you would expect to see it a few years from now, or a few cycles down the road. I also think it's a good reminder that not all of the or Plan C was the one who said you would get those chop solidations.
Yeah. It's funny that like this guy's name is Plan C. Now, he didn't come up with this, but he has like elevated it in the past couple days. And like Plan B from stock to flow, Plan C for institutional structure bit. Like, it writes itself.
I think it's a reminder too that we should not look to prior cycles to necessarily extrapolate what's going to happen at this cycle. And I think that goes both ways. I think that there's an argument to be made that a lot of people got ahead of their skis last cycle thinking about, Bitcoin's going to go to 300,000 because based on prior multiples from 2017 and 2018 and 2013 and 2014. On the same token, for this cycle, I want to be cautious about saying we're going to go up to this price target or whatever. But we've also never had a cycle where we've had this many institutions making bets on Bitcoin. And there are just so many new factors that people need to update or use to update their priors, I think. So last thing I will note, I guess it came from this account, but the person who first posted this, their Twitter handle or their Twitter username, deathcab for QE. That's got to be that's an all-timer. That is an all-timer Bitcoin pop culture cross-reference Twitter name. Yeah. So
it's almost as good as I lay hodling, which is your Twitter handle. Which is we're talking about 2000s era rock titans. You've got, although yours is not in reference to as a
but that's what everyone always thinks it is. Yeah. I think that wraps it up, except we forgot one more model that I actually think is
coming across our desk here.
I think it's the most important one yet, and I think we need to we need to close